Hi, Harry here with the Rant on July 1st. Well, finally the markets are pricing in a recession. Took them long enough. I mean, first quarter GDP was estimated really way back to be minus 1.6%. Now the best estimate for second quarter, which was expected to be positive, is minus 1%. So we're already in a recession, as I've been warning for a long time. Stocks now have been down over 20% for the S&P 500, 35% for the NASDAQ. That is finally pricing in a recession. But of course, the most important indicator, the bond market. Treasury bonds peaked at 3.5% 10-year yields when they were worrying the most about escalating inflation, and now have suddenly dropped to 2.87% this morning, saying, oh, now we're more worried about the slowdown and the recession. Finally, they got that. So people holding those treasury bonds are doing really well. If we're lucky, for people who haven't gotten in, we could see a bounce back to 3.2% yields if we're lucky, but we'll have to see on that. So we are in a recession. The economists are admitting this, but they're saying, oh, but it's going to be a mild recession. When will these people learn, okay? They have no awareness whatsoever of the long demographic slump after the baby boom peaked in 2007. They didn't come up with the demographic generation theory, so they're just going to ignore it. I mean, to their peril. This is ridiculous now. They keep expecting with a little stimulus every time we have financial problems, we'll come back stronger. No, the demographic trends from the baby bust after the baby boom peak in 2007 are bottoming. They're at their worst between 2020 and 23. Totally predictable on a 47-year lag, okay, to the birth index and immigration adjusted births. So the economy is only weaker. So as soon as we go into a downturn, it's only going to get weaker. And as soon as they stop stimulating, it's going to get weaker, okay? They don't get that. So prepare for the worst. Stocks, as we've shown, already look like they're in the final wave down of the first crash only. And that first crash tends to be 40%, and it's already hit 35%, as I said earlier. And I think likely, if it continues down, which looks like it's doing, into mid-July, my kind of best cycle low, we could be down 40% on the NASDAQ by mid-July. And when I do the next rant, it'll be July 15th, 2 weeks from now, and we ought to be sitting right at the point where we can judge, okay, is this first crash, has it continued, which I think it will, and does it look like we're at a bottom and we can finally see a couple month bounce? So that'll be the next key turning point. And boy, once we get that bounce, if we get a couple months, let's say it bottoms in mid-July, bounces into mid to late September, and starts to head down again, that will be the most predictable wave for investors to catch who want to short the markets. The first wave is hard to tell if it's peaked, but once you get this first wave bottom and a clear second wave bounce that retraces, say, 40% or more of that downturn, it gets easier to play that next wave. And that third wave always should be at least as strong as the first wave. And we've seen how strong the first wave has been and can be. So again, things are looking more and more predictable. That's good. People who stocks are going to go lower, I think, continue ahead, especially if we break 10,565, the recent low, which should happen pretty soon if we're going to continue down into mid-July. And that's when we expect a bounce. And then people can be looking to lighten up that didn't. And of course, the people who did should be happy. And traders can play this next bounce. And I'll keep you updated on that.